Welcome back, traders and investors, to our weekly trade analysis. This week, we'll focus on the key developments in gold, USDX, US 500, USTEC 100, DJIA ETF, QQQ, SPY, and VIX. Gold, XAU, USD, 4-hour chart analysis. Gold fell below the 38.2 Fibonacci level and the 1963-1972 demand zone at the beginning of last week's trades, which saw increased pressure at 1951 and a further decline to the 1938-1930 demand zone at the end of last week's trades. Gold recovery has hit a roadblock. However, gold prices managed to close above the 1938-1930 demand zone in Friday's trades, indicating that bulls are still in the fight and have not given up. If gold price can hold the current demand zone, it could retest the 38.2 Fib level and 1963-1972 supply zone. US dollar, USDX, weekly trade analysis. The index crossed over the critical resistance line at 101.120 and recorded 3 straight weeks of gains. Last week, the index continued above the 101.120 level early in the week and progressed to around 102.60, but pulled back on Friday, erasing half of the week's gains. It is crucial to watch the 101.120 level. The index will need to hold at this level to progress to the upside. US 500, SPX, 4-hour chart analysis. The index has fallen below a critical zone identified on July 14. The rally to 4,594 saw lots of volatility, as shown on the chart. The final attempt at the 4,594 supply zone failed at the beginning of the week, which led to further decline. Multiple attempts to hold the 4,500 demand zone towards the end of the week eventually failed on Friday's session, pushing the index below the 4,500 critical level. We might see another attempt at the 4500-4491 zone, with the 4466-4457 demand zone potentially being the next stop for the index. USTEC 100, USTEC, 4-hour chart analysis. Bull's final attempt to hold the 15,723 resistance line at the beginning of last week's trades failed, leading to a drop in prices below the 15,462 demand zone at the end of last week's trade. The index closed below the 15,300 critical support line in Friday's trades, a crucial level to watch in the upcoming trading session. Bulls must regain control at 15,300. Failure at 15,300 could give the bears the advantage, driving prices to the 15154-15038 demand zone. Dow Jones ETF, DIA, 4-hour chart analysis. The breakout at the 345,343 supply zone indicated in the July 5 analysis has hit a significant barrier at the 354,351 zone. The drop in prices below 351 at the end of last week's trades indicates a potential further decline to 348 and 345. Bulls need to reclaim the 351 level to take back control. QQQ ETF, daily chart analysis. QQQ ETF has been under pressure for 3 weeks, with increased volatility since falling below the 384.50 critical level indicated in the June 20 analysis. The price gap below 384.50 in the previous week was filled at the end of the week. However, bulls failed to reclaim 384.50. The weakness in the trend continued at the beginning of last week's trades, with a second price gap to the downside on Wednesday's trades now putting the index at risk of heading further south. Price needs to hold the 371,374 demand zone to avoid further decline. Failure could increase the chances of falling to 366, 361, and 357. S&P 500 ETF, SPY, daily chart analysis. S&P 500 ETF failed to continue at 458 estimates and pulled back to 444,448 demand zone at the end of last week's trades, a price point indicated in the June 20 analysis. The volatility in the previous week's trades extended to last week, with a price gap to the downside in Wednesday's trades. SPY closed Friday's trades within the 444,448 demand zone, a crucial area to watch in the upcoming trading sessions. SPY must hold above 444 to head back up. Failure could push prices down to 440, 434, and 430. Volatility Index (VIX) weekly chart analysis. The index has risen since bouncing off the 13 level highlighted in the July 13 analysis. VIX managed to close the weekly bar above the 16.61 level, a crucial point that acted as support from March to November 2021. The recent volatility seen in the stock market reflects the price movement in the index. The falling wedge price pattern marked on the chart indicates a potential price reversal to the upside. The critical level to watch is around the 16.61 support line. The index could continue to rise towards 19.40 if it holds above that level.